In this guide, I'll break down what investment banks do, how they're structured, and what it takes to join this competitive industry. First, let's discuss one of the most important things: what investment banks actually do. Investment banks act as intermediaries between entities that need to raise capital, such as governments and corporations, and those looking to invest and deploy funds, thus helping to accelerate growth across the economy, creating a more prosperous economy for all. So let's discuss first some of the main functions across an investment bank. First, we have raising capital. Investment banks help companies raise capital through equity, i.e. IPOs, or debt, such as bond issuances. For example, when a tech startup wants to go public for an IPO, investment bankers determine the offering price. They also market the shares to institutional investors. They underwrite the deal by purchasing unsold stock. And this process provides companies with the funding they need for expansion, whilst also offering investors access to new opportunities. Debt issuance is another critical function. Banks help governments and corporations issue bonds to fund projects ranging from infrastructure developments through to corporate acquisitions. By connecting borrowers with lenders, investment banks ensure efficient allocation of financial resources. Next, you have mergers and acquisitions, also known as M&A. M&A advisory is one of the most high-profile services offered by investment banks. They assist companies in buying, selling, or merging with other businesses by providing valuation analysis, negotiating terms, and ensuring compliance with regulatory requirements. For example, when two pharmaceutical companies merge to pool R&D resources, investment banks structure the deal to maximize shareholder value whilst also minimizing risks. These transactions often lead to greater market efficiency and innovation by consolidating resources or eliminating inefficiencies. Next, you have market making and trading. Sales and trading desks facilitate liquidity in financial markets by matching buyers and sellers of securities like stocks, bonds, or derivatives. By narrowing the bid-ask spreads and ensuring smoother execution of trades, these teams play a vital role in keeping markets functional even during periods of volatility. With this said, proprietary trading, where banks trade using their own capital, has largely declined due to post-2008 regulations. However, market-making activity remains a crucial revenue stream for investment banks. And then finally, you have securitization. Banks package assets like mortgages or loans into securities that are sold to investors. This process diversifies risk and creates new investment opportunities whilst freeing up capital for lenders to issue more loans. Through these activities, investment banks indirectly drive economic growth by funding innovation, creating jobs, and also stabilizing financial systems during periods of uncertainty. Next, let's discuss the structure and roles you have within investment banks. Investment banks are typically divided into three main areas. First, you've got the front office, and this is primarily revenue generating roles. Then you've got the middle office, which is primarily risk management. And then finally, you've got the back office, which is primarily operations. Each area plays a unique role in ensuring the bank's overall success. The front office is where the deals are made and the revenue is generated. So, key divisions within the front office include firstly the investment banking division, often referred to as IBD. Firstly, you've got the M&A teams. These teams advise on mergers and acquisitions by conducting financial modelling, preparing pitch books for clients, and managing due diligence processes. Analysts in M&A often work between 80 and 100 hours per week during live deals due to tight deadlines and client demands. Next, you have the capital markets teams. These teams execute IPOs or bond issuances by liaising with institutional investors like mutual funds or sovereign wealth funds. Next, you have the industry groups. These teams specialize in specific sectors such as healthcare or technology, combining deep industry knowledge with financial expertise to provide tailored advice for clients. Next, you've got sales and trading. Traders execute buy-sell orders for clients across equities, bonds, currencies, and derivative markets, whilst also managing risk exposure in real time. Then sales teams pitch investment ideas tailored to client portfolios based on market trends or research insights. Then you've also got research. Equity analysts publish reports on companies or industries that guide investor decisions whilst indirectly influencing stock prices. Next, you've got the middle office. This office ensures that front office activities align with regulatory requirements and also the risk tolerances within the bank. First, you've got risk management. These teams monitor trading desks for excessive exposure using stress tests or scenario analysis, i.e. predicting interest rate hikes. They ensure that the bank's activities do not jeopardize its financial stability. Next, you've got the compliance teams. These teams ensure adherence to global regulations and manage the relationships with the regulators. Then finally, you have the backbone, that is the back office. This office provides essential support functions that keep the bank running smoothly. Here you've got operations teams. They help to settle trades efficiently whilst managing corporate actions like dividends, payouts, or stock splits. Then you've got the IT department. These teams maintain trading platforms whilst also developing cybersecurity measures to protect against data breaches, which is a massive growing concern in the industry. In addition to these areas, you have essential areas such as procurement, finance, legal, HR, and public relations. So let's be honest, most of you are watching this video and probably interested in working in investment banking because you know it pays extremely well, especially at the top level. So you probably already knew this, but front office roles pay the most, and this is typically because they're the most demanding, but they also bring in the most revenue for the bank. Analysts in London can expect to earn between 48,000 and 70,000 in base salary, with total compensation including bonuses reaching between 84k and 165k. Then first year analysts at bulge bracket firms such as JP Morgan or Goldman Sachs typically start at 60 to 70k base, with bonuses consisting of 50 to 75% of total comp. Then associates see a significant jump in base salaries up to 95 to 130k, with total comp averaging between 160 to 250k. Then vice presidents command between 140 and 170k base salaries, with total earnings including bonuses ranging between 300 and 450k, as bonuses escalate here to 90 to 100%. Then you have directors and managing directors. They transition into a revenue sharing model at this level, with directors at top firms earning between 600 and 800k and MDs earning between 800 to 2 million plus through the deals that they generate. For middle and back office roles, these still pay very well. Risk and compliance professionals can earn between 45k to 150k dependent on their seniority. Then IT and cybersecurity roles often pay between 35k and 150k. Then roles such as procurement specialists can earn between 40 and 150k based on seniority and the category owns. It's actually possible for some people working in that to manage over £1 billion worth of spend. Then directors and managing directors in these areas can also earn significantly more. Salaries in New York are typically 15 to 30% higher than London due to market dynamics. Now that you know how insane the salaries can be, let's talk about how you can break into investment banking. Like most jobs, a strong academic background is essential. Degrees in finance, economics, or STEM fields are particularly preferred, usually from top universities. Certifications such as the CFA Level 1 can also boost non-financial majors profiles. Key skills that investment banks look for include technical expertise in Excel modeling, especially DCF analysis, PowerPoint presentations, which include pitch books, and basic coding languages like Python. Soft skills such as resilience under pressure and attention to detail are also needed. Now let's talk about the recruitment process. So the first thing I recommend you do is apply for internships at bulge brackets, for example JP Morgan, or elite boutiques such as Evercore. Next, you want to prepare for technical interview questions. So think about walk me through an LBO alongside the behavioural fit questions such as why do you want to work in this role? Networking is crucial. attend industrial events, or connect with alumni working at target firms to help you to get a foot in the door. Some firms also have special pathways for military leavers and diverse candidates, so should you fall in this category, I would highly recommend that you look out for one of those.